Greetings, everybody. This is Christopher Messina coming at you from the Messy Time Studios on another beautiful post-FTX collapse day here in sunny Florida. It's the 18th of November, 2022. I'm joined today and honored to have him by Fred Grede, who is joining us from some place that has snow on the ground, which I've heard of. Apparently, it's this white, cold stuff that lands on the ground. We don't have them here. Fred is an old colleague and friend who spent years in the exchange world and has the distinction of having spent a dozen years as a Chapter 11 bankruptcy trustee. So with that in mind, Fred, I hear someone stupid has gone and committed fraud and crapped the money bed. What do you know about it?
Well, I know what I read in the press reports so far and the bankruptcy filings, but as I say, I have a lot of thoughts about what's happening in the crypto industry, and I think FTX is probably a perfect example of some of the issues that I think the crypto industry faces or has faced and continues to face. Chris, just by a little bit of background, my first job in this industry was as an auditor for the Chicago Board of Trade. And as an auditor, we would go out and perform financial and compliance audits of the brokerage firms, of the futures commission merchants.
Right.
And I remember the first day I started in a training session at the Board of Trade, we learned about segregation of customer assets.
Valuable idea.
A valuable idea. And to me, it was the first thing I learned, and it was the hallmark of the industry, of the futures industry. And yeah, there's been examples along the way, like the Sentinel case that I was the trustee for, and MF Global, where there's been misuse of customer assets. But it's a fundamental principle of, the futures industry, I think of the securities industry, that you treat your customer assets like gold. You don't touch your customer assets.
Ever.
And as you're seeing now with FTX, the biggest problem, I think, in my view, is the misuse of customer assets. And I don't think the misuse of customer assets is limited to FTX. I think you're going to see that more rampant than we wish for in the crypto industry. So to me, that's the fundamental place to start, with the protection of the customer assets, the segregation of the customer assets. There, you can't commingle those assets with the general operating funds of the firm. And I think in FTX's case, it very much appears that those customer assets were misused and most likely commingled with the general operating funds of FTX.
That would be potentially the understatement of the decade. So I think that's going to be the major headache, right? And I've watched this. It is, I don't mean to sound oracular, but having done a lot of due diligence over the years and having been in the position of saying no to deals that a lot of people around me and senior to me in a firm were pushing for, but I saw problems that were just inexplicable, and so we just couldn't do it, right? So I'm curious about, there's a lot of social pressure to go along with kind of the crowd, but way too many supposedly smart people gave this schlub a ton of money. It's just kind of startling. Like, if you ask basic questions, you would be done with due diligence in 4 minutes and walk out the door. I mean, I'm kind of blown away by the extent to which otherwise really smart people allowed themselves to get snowed. I mean, do you have an idea of how they did it? Any thoughts?
Yeah, so I think let's talk about that from an investment standpoint. The treatment of the customers is something different in my view. But I think, and I don't mean to be out there sounding critical, but Silicon Valley and investments are all driven by technology. And it seems to be, who's got the hottest technology, who's got the fanciest technology. And that's what's driving the investment.
Right.
And maybe in FTX's case, in spite of the issues that are coming out now, seemingly they had pretty good technology. It was user friendly. The customers who use their trading platform seem to like their trading platform. So my response to you is it's all driven by technology and the fear of missing out. As I have always said, there's kind of I call it the Silicon Valley approach to markets.
Yep.
You can put up a trading screen, you can make the trading screen look fancy and make it look nice, and it appeals to a lot of retail customers. But what's behind it? And, is it all smoke and mirrors? And I think that's what we're finding out, that it was all smoke and mirrors. So, they need a deeper dive. Did they ever ask SBF, has he ever run an exchange before? Did they ask
you silly
Sam?
old-fashioned person? This is DeFi.
Well, I know, I know that. No, but did they ever ask him, do you segregate your customer funds?
He might have looked baffled at the first question. Then he would have gone and Googled that on Wikipedia for the next meeting and would have said, yes.
Well, I was at a seminar probably about 2 years ago. A number of cryptocurrency exchanges and firms were on the panel. And somebody asked one of the representatives, does your firm segregate its customer funds? And the response was, what does that mean? What segregation?
Does that mean?
So as I say, unfortunately, I think this will not be the only example of the misuse of customer funds.
No, and it's funny because I have had to say this a few times, that having run regulated entities, both regulated by SEC, CFTC, FSA, right? Proud to say I've got a perfectly clean record. Nothing's gone awry on my watch. I'm very happy about that. But if you are used to running something well, and you're doing nothing wrong, it's kind of sometimes easy to bitch about the regulators. It takes time in your day, it's added expense. But coming from the perspective of someone who is not committing a crime, regulatory oversight can often feel like a tax you're paying for the bad actions of others. Like, why am I, spending all this time and money on recording phones and all this stuff? But then this kind of thing happens, and you realize, actually, I don't mind an intelligent level of regulation, right? I don't mind the idea for markets to function. There's something very great about the fact that the SEC can walk in at any moment and tell you to get out of your chair and look at your systems directly. There's something actually very salutary about that. And all of that has been lacking in this space. And part of it is deliberate lying. Part of it is marketing, right? We're staking, man. No, you're lending. We've got a word for that already. You don't invent a new one. It's called lending.
Right. Right.
So a lot of it's the razzle dazzle. And yeah, if you create good tech and help the user interface, that explains retail uptake. But it still doesn't explain why Sequoia and all these other people wrote them a check. I mean, I find that sort of really astonishing that no one bothered to do any due diligence on this kid that, frankly, appeared out of nowhere 3 years ago, claiming to have $1 billion. And as one guy put it in a podcast he did back in October before this collapsed, that's kind of an investor intel podcast. And he's like, I don't get it. Who is this kid? Where did this money come from? None of his answers made any sense, right? So that was someone like us who had gone and spoken to him and came away like, this is crap. He doesn't know what the hell he's talking about. So it's kind of fascinating to me that he built so many people out of so much money.
Yeah, but you and I might have seen that, but nobody would believe you or I. They would believe him over you or I, because again, they're driven by the fear of missing out on this, this tremendous opportunity.
Yeah. Well, for their troubles, they not only lost money, they're about to get sued into oblivion. But anyway.
Well, as far as the investors are concerned, that's right.
Oh yeah, yeah. But broader speaking, because I'm curious your thought on this. I think frauds like these guys, to me, as far as I can tell, Caroline and Sam, they should spend their lives in prison, like the founder of Silk Road. Like, to me, there's no difference whatsoever, right? That's my opinion. But in terms of the damage that can be done by this is I both know there are phenomenally real opportunities to use blockchain technology to create better trading protocols, create better products, all that. And I'm concerned about the damage done to actual productive businesses that are going to get caught up in the sort of penumbra of it's crypto, it must be criminal, and they're going to move on. You think I'm overblown on that, or is that a real risk?
It's a concern, but I would say it's more overblown, to be honest with you.
That's good.
A couple of comments, I guess, on the fraud to start with. And I've obviously studied the Madoff case. I know the case that I was involved with, the Sentinel Management case. And I don't know, even in the case of Madoff, I don't know that the business originally starts out with an evil intent. In the Madoff case, I think what happened is they made some mistakes on a busy day in the back office, and then they try to cover them up, and then they try to cover it up some more, and then before you know it, it's out of control.
Right.
In my case, what happened in the Sentinel Management case, what happened is that the customer assets were essentially double pledged. Right. They were pledged to the customers, but then they were also pledged to the bank, and they ended up getting $300 or $400 million worth of loans secured by the customer assets.
Ouch.
Now, yeah, ouch. So, in the case here, it simply gets back to the beginning of our conversation. Did SBF know what they were doing with respect to the handling of customer assets? And I think it's pretty clear that they did not.
Well, I want to touch
treated on that money as if it were their own. So go ahead.
Right, and that's a very important sentence, right? Is did he know? I think he was the one that took the customer assets and gave it to his stoned girlfriend, who then blew it. So I think he knew exactly what he was doing. But if you mean it in the sense of, did he know how he should operate things? I've got no idea. I mean, there's a reason you're hiding in the Bahamas instead of running this thing in Miami if you like warm weather, right? There's a reason you're doing it there. And I think the reason has become abundantly clear. And that's going to be a very strong lesson and certainly going to create major headaches for regulation. It's going to be it's going to set back, I think, and I just kind of got a bit of this. At the very least, it's going to make Gary Gensler's position difficult because he was on the same MIT faculty with Caroline's dad, right? So they worked together on this crypto stuff, right? At the very least, it's going to be really hard for him to say, I shouldn't recuse myself from this particular. I don't think case is the right word because they weren't SEC regulated, but you get my point. Like it's going to be very, very messy. Maxine Waters is trying to jam through an investigation in December while the Democrats still control the House. Well, I bet she is. She's got pictures of her smiling with Sam, who gave her a lot of money. Right? If she thinks that she's going to have investigations and wrap it up before the Republicans take over, she's living in a fantasy land. So the ripples are going to go on for a while here.
Well, those ripples are going to go on for a while. We haven't seen the end. We're probably just at the beginning of the ripple effect or the contagion effect on many other firms. Yes. So anytime there's a bankruptcy, there's probably 10 or 12 or 15 other firms that are going to suffer from the fallout as well. But, you know, back to the Bahamas, there's a real, you know, there's a jurisdictional question now as to whether the Bahamian regulatory authorities have the oversight or whether it's the US or somewhere else. And this is going to be a real challenge for the Bahamian regulatory authorities.
Oh,
I
yeah.
mean, do they have the capability to handle the complexities of this case? And so it's going to be a real test for them as well.
Just from a size perspective, I mean, they don't have the staff, or I think they're going to be happy to hand this hot potato off the millisecond they have any, you know, the millisecond the U.S. claims jurisdiction, they're going to agree to it, I bet. They're not going to damage their overall relationship with the U.S. over this guy. I don't think. I don't see why they would.
Well, that's a very good question.
Yeah.
But so far, you know, they've been trying to keep the jurisdiction.
They're trying to, right? But it's going to be curious to see. You got to wonder how much of that is because how much of what they have done to facilitate FTX do they not want to come out? I mean, there's plenty of room for egg on face for a lot of people here.
Oh, yeah.
Right?
There's no question.
And I think the fact that Sam gave $40 million to U.S., you know, politicians in this last cycle alone, there's jurisdiction right there. Like, if one penny of that was wired from an FTX account, which it probably was because they're incredibly sloppy, there's your nexus right there. Right. And I think anything they have like that is going to do it. But I'm curious, the Sentinel thing, especially fascinated by, because I was the chief operating officer of FCM right before they collapsed. And they had come and pitched us on their fancy product, and I just could never get them, I could never get them to explain to me why their trading money market funds would yield 75 basis points more than I could get on my own. They could never explain that to me. And well, there's the answer. They couldn't.
Yeah, there is the answer.
There's the answer, because it never made any sense to me. And they were good salesmen.
No,
great guys.
They essentially took those funds, obtained loans from the banks, collateralized by the customer funds, and then levered their trading activity.
Yep.
Chris, when I first got in there, they had a portfolio of about $3 billion US dollars. And it was some of the most exotic. This is 2007 now, right at the height of the CDO crisis. And there were, I mean, I spent half my time learning about the structure of collateralized debt obligations and equity tranches and so on and so forth. Yeah. And it was just, it was a very complex case. Yeah. And unwinding those in a very illiquid market was also a challenge.
Oh, God, yeah. And in relation to that, I mean, in terms of, it's very early days for this FTX thing. Is there some sort of, I'm going to ask the question knowing it's a stupid one. Is there some sort of benchmark number of kind of cents on the dollar that creditors should expect out of this, or it's just all over the show depending on what they did?
Well, when you use the word creditor, there may well be different classes of creditors.
Right.
I don't know if there's any secured creditors. I'm not aware that there are. I think it was mostly equity investments into the company.
Yeah, or deposits
but there could
on
be
the
some
platform.
Secured.
Customer accounts on the platform, to me, are kind of
well. Now that's the next question: the customer accounts. If the customers can identify their deposits and identify where they're held, there may be a reasonable chance that some of that customer money can get returned. But again, as I go back to the beginning of our conversation, is it all commingled with the general operating funds of the firm, in which case the customers may well become just general creditors like every other creditor. And so
and a good question
what my point is,
how do they characterize? So there's the customer segregated accounts, or customer accounts segregated, definitely not. Then there's the operating capital of the business, But then there's also the Alameda Research fund manager. That's where that's where, as far as I gather, the money went. He took customer money, gave it to his ditzy girlfriend, and she blew it. Or maybe she didn't blow it. I mean, the best opportunity for customers, I guess, would be she's just a bad trader and lost 10%, and there's actually 90% still sitting there. I mean, that would be a win for customers.
Well, right? Yeah, now we got to get back to the case for a minute, because I know Mr. Ray seems to be eminently qualified, but there's a couple of things so far that I would still have some questions about. You know, who does he represent? Does he represent the company? Does he represent the creditors? Does he represent the customers?
Yeah.
Does he represent the shareholders? So far, from what I can tell, there hasn't been a creditors committee appointed yet.
Right.
And I would think that the largest customers would have a committee to represent their interests, or is each customer out there on their own with their own attorneys? And then the third point I would make to you is jurisdiction. I mean, a Chapter 11 bankruptcy trustee has legal authority to sue people like Alameda,
right,
like the auditors, the accountants, like the individuals, to sue them and to recover those funds. So I don't know what status Mr. Ray has as to whether or not he has that legal authority to sue other parties to try to recover assets.
Good question.
And then, you know, you likely have to go back for the last 90 days or even longer if there's fraud involved to look at flows that went out of the company, and are those preferential transfers either to individuals, to Alameda, to the other companies. So as I say, there's still a number of legal questions as to what authority he has and where he can go.
You raise an interesting point. So for many victims of Bernie Madoff, for example, right, they found the pain kept coming because I forget what time period they looked back, but like if you were lucky enough to have gotten distributions, I think the bankruptcy court or whoever it was who was sharing all that, or whoever sued, like it went back, I think, like 3 years even. So they came back to you and said, "You proved that wasn't yours. That was part of a criminal enterprise. You give it back, and we're going to divvy it up in the general pool." I mean, Fred Wilpon had to sell the Mets to raise the cash to give back what he had taken from it. So this will be a massive headache for a long time, it appears.
Yeah, there's two ways to think about that. One is a preferential transfer, and generally speaking, I believe it's 90 days. You can go back and recover those without having to prove fraud.
Right.
But now if it's a fraudulent enterprise like Madoff turned out to be, then you can go back for a lot longer period of time to try to recover those assets. I mean, it's more complicated than that, but generally speaking, that's the way to look at it. That's the way to think about it.
Yeah. And that gets very messy. So, you know, you got $1 million distribution 3 years ago. First off, you pay taxes on it. And then you likely, you know, paid for a kid's education and bought a house. Whatever you did, it's gone. It's like it's sitting there. So now you've got to, depending upon your circumstances, go find it. I'm quite sure the IRS is not in the business of refunding you the taxes you paid on your fraudulent distribution.
That's right.
Right.
So even these people that, even customers that took their funds out within the last 90 days.
They're very nervous too.
Yeah, I wouldn't go spending them yet.
Yeah. Wow. Huh. So what, for people who are watching this from who are interested, but there's going to be, I think I did read that in whatever the filing that Mr. Ray put in, I think it said something about he's representing the creditors. But again, that's a good question. Who are the creditors? Are they fine question? What is that a class? It's a good question. Who is it? Who hired him? Because it certainly wasn't Sam. What's your prediction? Is he going to fight extradition and try to hide there for the rest of his life? Are we have to send in the marshals to get him in the dead of night?
Well, I see that he's just now obtained a criminal lawyer, which is probably a good thing.
Great idea. Stop tweeting.
Yeah. Yeah, that's the first thing the lawyer is going to tell him. Stop tweeting.
Absolutely. Give me your phone. Right. You're done.
Yeah, absolutely right. Is he going to fight it? Where would you rather be, in the Bahamas or in
prison,
in snowy north? Right.
Yeah.
Well, let me go back to something for a minute, and I skipped over this. In the Sentinel case, as I told you, I explained the misuse of customer assets. And again, a bankruptcy trustee does not have any kind of criminal authority. Right. Only the U.S. attorney does. But in that case, the CEO ended up being sentenced to 14 years in prison, and the head trader got 10 years in prison. So I don't want to make any predictions again about.
Yeah, if you just did it by scale.
Right.
Right.
Right. So his worry right now has to be criminal.
Oh, God, yeah. I want. I guess it's funny. I've never met him, and I looked at it cursorily because two of the crypto funds I advise, were using various platforms. I never looked into them too much because, anything that doesn't have a regulatory imprimatur, I just don't bother because of this, right? Because this can happen, and other ones, Mt. Gox and lots of others just disappeared. But I find him a little, having looked into, I just find it absolutely fascinating. Like the whole shtick with the, schlubby shorts and the dirty socks, and he insists on wearing them alongside, Bill Clinton and Bill Gates on a stage at the World Economic Forum. I mean, I gave him like gold star Palme d'Or credits for like supremely weird acting. Like, maybe that's part of the shtick. If you don't peacock in some way, then you're just one more guy trying to make a pitch. And he was lucky enough or smart enough to take some cash and hire football stars and basketball stars, and they all made it look good, I guess.
Well, here's the other thing, is that many of these crypto firms or crypto exchanges are in reality more like dealers than they are exchanges.
Right.
And by that I mean FTX, as an example, had a huge inventory of crypto. And I saw somewhere, whether it's true or not remains to be seen, but I saw somewhere where 50% of the trade on FTX was FTX on one side of the order against their customers.
Right.
All right. So when Bitcoin now and other cryptocurrencies are at $80,000, they have more money than they know what to do with. So they spend it on Major League Baseball umpires and the Miami Arena, and they spend $40 million on political donations, and on and on and on.
Right.
They didn't know what to do with all that money. But now when Bitcoin falls to 20,000 or 18 or 16, now screwed.
Deeply.
Now they're screwed, deeply screwed.
Yep.
And I think that's another pattern that you're seeing throughout the crypto industry, is that, everything was totally reliant on the correlation to the underlying value of cryptocurrency.
Which is what I've found completely insane in this space. I helped a friend out about a year ago, a little longer, was approached by, doesn't matter, I'll give too many details. The point is, this one entity wanted to basically buy his company in exchange for their crypto token. And he's like, Why would I want to do that? Like, what are you talking about? What? And then, of course, they're spinning this whole spiel about how it's going to go up in value and all this crap. Luckily, he didn't do that because it collapsed and he would have been out of everything. His wife would have left him if not cut him open. But a lot of people got suckered into this story, and I find it odd because, as well, one of my mining companies, Real Mining, a hard rock mining, is working on something using a wrapper based on Ethereum. But it doesn't depend on the price of Ethereum. It's just a database, right? So what I've been fascinated watching this, the number of real world examples of anyone thinking that crypto had value is almost vanishingly small, right? It was mainly the people that created the coin that spend all their time on marketing and influencers and all this nonsense to convince people that there's some there. I just think that house of cards is collapsing, and these are fundamentally worth nothing, which is really a problem.
Well, let's put Bitcoin and Ethereum kind of in a separate box because, Ethereum may have something behind it because of the gas fees for use of the network and so on and so forth.
Yep.
Bitcoin is, initially the original currency of blockchain technology. But, go to this FTT token for a minute.
Yeah.
I mean, what is that? Or what was that, I should say? I mean, and you and I can argue, was that a security? I'm sure Gary Gensler is going to say it should have been a security, but there's really nothing behind it.
Nothing at all.
And all of a sudden, there's nothing behind it. And all of a sudden, that becomes basically an additional currency that he's using to do what? Invest in other companies,
yeah. Well, to
buy
me,
houses with it.
All of these things that they use for their internal operations strike me as, company script, right? You used to be a coal miner before the union started in 1890, right? And you weren't given dollars for work. No. What would you do with dollars? We're going to give you company script, which is kind of like dollars, but you can only buy stuff in the company store. So even if you could get into town, you can't buy cheaper wheat from the general store because you only have script. You don't have dollars. So this is a story as old as time, right? There's nothing new here. They just made it sound cool. But why would you ever take anyone's company script for something? And that's what they managed to convince lots of people to do because it sounded so cool and sexy.
Right.
Crypto script. Must be awesome.
But I mean, Chris, those are a couple of things where we even go back to whether you want to go back to political donations or where we're going as far as regulation is concerned. And, to me, it's not that complicated. If you're going to run an exchange, you probably should register with the CFTC. If you're trading securities, you register with the SEC. We can argue about what a security is until,
right.
Some
forever. Oversight, no matter even if it's not a security, some oversight is a good idea. If that means that customer funds are kept away from the operating funds of any exchange, no matter what they're trading.
Yeah, that's point number one. Absolutely right. And then secondly, we've talked about, if you're a dealer and you're trading against your customers' orders, well, that probably ought to be disclosed. Customers ought to know that.
Yeah, they should know you're a market maker and not an exchange.
Exactly.
Yep.
And then, the whole token business, what are those? As I say, are they securities? Is there anything behind it? And we can get into, Luna and Tether and everything else. But again, I would tell you they need to be backed by actual assets.
You Luddite.
In a lot of cases.
No,
right. Yeah, because it's not there. It's not sustainable, right?
Yeah. So, what do you think? What's the at this stage, having seen the development to here of the market overall with this kind of massive screw up? does this whole thing go away? And it's a fascinating historical footnote when people used to trade digital money, ha ha ha. Or, is there something fundamentally valuable that remains? And now the adults are in charge and the kids can stop blowing $40 million on pets.com ads.
I think that the technology is fundamentally very good.
Yeah.
I think the technology is transformative. I mean, as we look at whether it's the futures industry or the securities industry, if I sell my Apple stock, it takes me 3 days to get paid.
Right.
Why does it take 3 days?
Madness. It should be instantaneous. Exactly.
It should be instantaneous. So I think the technology is terrific. Look, the real money in this space is with the institutional market, is with the professional traders. Retail is great. You need retail participation. But before the institutions come into play in a big way, you're going to have regulation. You're going to have liquidity on your markets. You're going to have reliable trading technology and infrastructure. And you're going to have, as you may put it, some adults in the room that
no more beanbag chairs and polyamorous companies.
Will know how to treat their customers and their customer funds.
Right.
And they're not your own funds to deal with as you please. So yeah, I think you'll absolutely see regulation over the course of the next year. I don't think you need to make it that complicated to start with. As I said, there's a couple of fundamental principles. Register with somebody, CFTC or the SEC, protect those customer funds.
Yeah, there's a lot to be said for it. It's funny. I found myself correcting my comments because my occasional critiques of the regulators, I realize, come from a place where I'm not criticizing their core function. I'm just thinking in this particular instance, they're overreaching and wasting everybody's time for no reason, right? So that I have to modify my own comments because it sounds like I hate regulation. I actually don't. I hate pointless waste of time regulation, but actually trust markets that has some supervision. There's something comforting about American banks that at any moment the Fed can walk in and tell the CEO to get out. What's your password? And take a look at what's happening. There's something good about that. Now, that, of course, assumes regulators are good people and do their job well, and I think most of them do. But it's going to be a fascinating discussion after this as to what regulation looks like in this space and how it works.
Well, you and I are always going to argue with the regulators about this issue or that issue, or whether it makes sense or doesn't make sense. I mean, that's the nature of the beast. They would, but I think I look at the futures business as an example, and the volume and the success in the futures industry, in my view, is in part due to the fact that industry is regulated by the Commodity Futures Trading Commission.
Yeah.
Securities industry and the growth of securities industry is very similar. And I will continue to argue that, the U.S. regulatory system is the gold medallion, if you will. If you have the SEC approvals or the CFTC approvals, those are not easy to get, and they should be highly valued and highly respected. And again, as I say, the volume of activity in the futures business, the securities business is in good part due to the regulatory structures. So
cool. Last question, and this is a complete crystal ball question, so no one's going to be held to it. I've got my own answer. Knowing what we know now, right? And so as you alluded to earlier on, that frauds like this either happen deliberately or by accident, right? And so like Nick Leeson brought down Barings, I would argue, by accident. He tried to fill a shortfall at the Singapore Exchange for like something trivial like 10,000 pounds, right? So he created a false account, and he clearly didn't cover it up. He lost more. So had he first gone to his boss and said, I screwed up, take it out of my bonus, fire me, whatever, 10 grand, we owe at the exchange. But instead, it brought down one of the oldest banks in the world. Because the losses just kept multiplying. And there's one truth in markets. When you have to win, you never do. Right? When you have to get the trade right, you never do. And that's karma. So that's my question. When all this is said and done, did SBF and his merry band of stone polyamorous lunatics in the Bahamas, that's a loaded question, did they set out to commit colossal fraud, or did they just make a mistake and it ballooned? What do you think?
I think it's more of they didn't know what they were doing.
So it was an accident. By the time it got away from them, it was just too late.
Yeah, they were more focused on the marketing, on the pizzazz, on the politics, on sponsoring major league umpires, and raising more capital, because it just kept coming and coming and coming.
Because the beast.
So I think they were more focused on that, and didn't really understand. I'll call it the plumbing.
Right.
Didn't understand
at all. No systems of controls, operational controls, risk management, financial, nothing.
Right.
All right. That's fair. I'm inclined to believe that's true, because for all the mistakes and idiocy, these weren't stupid people. Often very bright ones are full of hubris, and that's worse than being. I'd rather take someone of middling intelligence who works hard to get it right, because they tend not to have spectacular failures like this. But did this merry band of clever people think that they were just too smart? Possibly. People have before in the past. There's a reason the Greeks have the word hubris. So
yeah.
Well, Fred, thank you so much. Is there anything I missed that you would leave our listeners with?
No, I think we covered much of it. So stay tuned, I would say, because there's likely more to come.
We will come back with running commentary as things develop. It'll be exciting. So thank you so much again, Fred. And for all my listeners, just remember to turn off the mainstream media, because they're lying to you, especially about this, and tune into Messy Times. Ciao.
Learn what Bitcoin is, how it works, and why it matters. Bitcoin 101, your ultimate guide to the fundamentals of blockchain.